Hello everyone, welcome to TaxExterminator.com, where we kill taxes dead. You're going to learn how to reduce your taxes legally beginning today. I'm your host, Brent Jordan. I'm a veteran tax attorney, former UCLA adjunct professor, and current district court trial judge. Your webinar today is entitled The 12 Biggest Tax Mistakes That Cost Business Owners Thousands of Dollars Each Year. This webinar has legal authority based upon the IRS Tax Code, United States Treasury regulations and tax court rulings, and the IRS revenue procedures, private letter rulings, publications, the manual, and tax forms. Today's segment is entitled Wrong Business Entities. But before we get started, a little bit of humor. Two guys working in an office. One looks up at the other and says, "I spend 30% of my day working for the tax man. So that's the part of the day when I goof off." The business entities I want to look at are sole proprietorship, partnership, limited liability company, S corporation, and C corporation. We're going to compare and contrast each of these entities. So let's begin. With respect to a sole proprietorship and partnership, as you can see, I've rated 3 areas: the paperwork, or how easy it is to set up and run such a business, the tax consequences, and the asset protection. With respect to a sole proprietorship and partnership, I give it an A+ for the paperwork and ease of setup and use. You simply need a business license and you're in business. Very easy. That's why most people have a sole proprietorship in America. However, the tax consequences, I give a C. Why? The owner has to pay self-employment taxes and employee payroll taxes, and there's nothing he or she can do to control it. As far as asset protection, I give this type of business entity a D. Why? There is no asset protection. All assets of the owner, including the business assets and his or her personal assets, are exposed for anyone to obtain. However, the owner can reduce this risk through payment of premiums for liability insurance and property insurance. Next, let's look at the limited liability company, otherwise known as an LLC. Paperwork, a little less grade than the sole proprietorship. I give it a B. It's still fairly simple. You set up an operating agreement, and there's no formalities throughout the year. So basically, you file with the Secretary of State various documents, you obtain a business license, and you're on your way. No formalities, no minutes of the meetings throughout the year. As far as taxes go, I give it a B. There's methods that can be utilized to reduce the self-employment taxes if you own an LLC substantially. And also, the owner for an employee, such as a husband who employs a wife, can set up a medical expense reimbursement plan that can really benefit the family. In fact, even pay for the kids' braces. As far as asset protection, I give it a rock solid A. Why? Because when a third party attempts to sue the owner of a limited liability company, the third party is normally limited to the assets of the LLC and to a charging order against those assets, which is difficult to proceed forward with. And like the sole proprietor, an LLC owner can acquire insurance for additional protection. Next, we look at a C corporation. Paperwork, meaning ease of setting it up and running the business, a D. You have the articles of incorporation that need to be filed with the Secretary of State and various other documents, and then there's numerous corporate formalities throughout the year. Need to be carefully addressed throughout the year. As far as taxes are concerned, I give a C corporation a solid A. The C corporation has earnings which are referred to as retained earnings. There's numerous strategies you can do to reduce your tax rate from 39.6% to 15% using a retained earnings strategy. Also, the C corporation allows for the medical expense reimbursement plan, which is a real favorite amongst families. Asset protection, solid A. Just like the LLC, major asset protection. If a third party attempts to sue the business, normally in most cases, they're only able to get to the assets of the corporation and not the personal assets of the individual. However, there are some exceptions. And like always, the owner can acquire insurance to protect the corporation as far as liability or property is concerned. Finally, we look at the S corporation. The S corporation is a subchapter of the C corporation and needs to basically be set up as a C corporation and then designated as an S corporation in a timely manner during the year. Paperwork, a C. Various documents need to be filed with the Secretary of State, and there are corporate formalities. As far as taxes, I give it a B. Through various strategies, a S corporation owner can substantially reduce his or her self-employment taxes. And finally, asset protection, an A. It works very similar as the C corporation. Will Rogers once said, "The difference between death and taxes is death doesn't get worse every time Congress meets." There's a treasure chest of free money buried in your business. Claim it today. Well, that wraps up another segment of our webinar entitled The 12 Biggest Tax Mistakes That Cost Business Owners Thousands of Dollars Each Year. Brought to you by TaxExterminator.com, home of the Proactive Tax Plan. Thank you for joining us for the webinar, and I hope to see you again for segment number 3 entitled Missing Office Deductions. For a limited time only, I'm giving away a free copy of my tax strategy book entitled 10 Powerful Tax Strategies That Pass IRS Scrutiny. I published the book with Amazon.com and Barnes & Noble, and you can obtain a free copy right now, today, at TaxExterminator.com.